Welcome to the Deep Dive. Today we're plunging into a really fascinating report. It lays out the current pulse of the crypto market. It's September 17th, 2025, and you can kind of feel the anticipation in the air, right? You've brought us this detailed crypto market analysis report, and our mission really is to cut through the noise, understand the critical stuff, and see what it all means for you, our listener, trying to navigate these, well, incredibly dynamic waters.
Yeah, what's truly compelling here is seeing how these big global macroeconomic forces are converging with this rapidly changing digital asset space. This report really captures a pivotal moment. A single decision from the U.S. Federal Reserve could send ripples, maybe even waves, through the whole crypto ecosystem. We'll try and connect those dots for you, looking at, the immediate reactions, but also the bigger, longer-term implications.
And it really is a high-stakes moment. The market seems to be in this state of tense waiting right now. All eyes are glued to the Fed's monetary policy decisions and Chairman Jerome Powell's speech after the FOMC meeting. This isn't just another Tuesday. It honestly feels like the digital asset world is holding its breath.
Yeah.
So let's really unpack why. Why does this particular Fed decision hold so much weight for crypto?
Well, at its core, it boils down to two main things: global liquidity and investor risk appetite. See, interest rate decisions are basically the levers. They directly influence how much money is sloshing around the financial system, and crucially, how willing investors are to take on risk with assets that seem more volatile, like crypto.
Right. More risk, less risk.
Exactly. So if the Fed cuts rates, it generally signals easier money. That tends to encourage investment in riskier assets. But if they keep rates high, or worse, signal a hawkish stance, well, that often triggers sell-offs. Investors look for safer places. Now, what's really impactful for crypto right now is just how sensitive these digital assets are. Even tiny shifts in global liquidity seem to hit crypto harder than, say, traditional stocks. It potentially amplifies those price moves.
Ah, okay. So it's like a magnifying effect almost.
Precisely. And this is all happening, by the way, against this backdrop of increased crypto regulatory lobbying in the U.S. and those incredibly strong ETF inflows we keep seeing. So it all makes for a truly complex and, potentially very volatile environment.
Okay, that macro picture makes sense. But let's get down to brass tacks. For our listeners maybe holding Bitcoin, Ethereum, what does this report suggest they should brace for? Like in the next 24 to 48 hours, are we talking a predictable little bounce, or is this genuine turbulence?
I'd lean towards genuine turbulence, honestly, but with clear potential directions. For Bitcoin, okay, the price recently touched $117,000. That's impressive, but is currently wrestling with a key resistance level right around $116,000. The report basically outlines two distinct scenarios.
Okay.
Positive scenario: Fed cuts rates like the market hopes. BTC could decisively break past 116K, maybe aim for $120,000, even $125,000. Negative scenario: a hawkish decision. Maybe Powell sounds worried about inflation, hints at more hikes. That could send prices correcting downwards, looking for lower support levels.
Right.
And here's a detail that really jumped out at me in the report. A whale wallet one that had been totally inactive for an incredible 12 years moved 1,000 BTC right before this Fed meeting.
Wow, 12 years.
12 years. That's not just some random transaction, right?
Yeah.
It feels like a strong signal that very large, very sophisticated holders are getting ready for big market shifts. They're anticipating major volatility.
Wow, a 12-year inactive whale moving 1,000 Bitcoin just before this meeting. That's a real wild card. Does the report give any hint if this is, like, common before Fed days? Or does it maybe suggest this decision feels heavier than usual, feels like a signal to be, hyper vigilant?
Well, absolutely heightened vigilance. I mean, while large moves happen, that long inactivity period really amplifies the significance. It suggests a belief, maybe among this sort of old money crypto crowd, that this Fed announcement could genuinely be market defining. So they're either locking in profits or maybe repositioning for some really big swings. They're not just reacting, they're anticipating something major.
Makes sense. Okay, and what about Ethereum? It's often seen as kind of the bellwether for the wider altcoin market. What's its immediate outlook look like?
Well, ETH has actually been making some pretty significant strides lately. It's even been outperforming Bitcoin in percentage growth recently. The positive feeling is clearly fueled by those ongoing Ether ETF inflows and also just the relentless pace of stablecoin development happening on Ethereum. But it still hasn't quite managed to surpass its 2021 all-time high, the $4,867 mark.
Still chasing that high.
Still chasing it. And just like Bitcoin, its price is going to be incredibly sensitive to whatever the Fed decides. What's particularly interesting, though, is the data showing the supply of ETH sitting on exchanges is actually decreasing.
Oh,
Yeah, that could potentially amplify price swings. You get a sort of supply shock effect if demand suddenly spikes or dips. If there's less ETH readily available for trading, even smaller shifts in buying or selling could lead to, well, sharper moves. Disproportionately sharp.
that ETH supply shrinking on exchanges. That's a really powerful point. Sounds like a tighter market could mean, well, bigger fireworks potentially. Speaking of altcoins then, is this altcoin season, the thing we've heard about for ages, is it finally showing real signs of life? It's the dream for a lot of crypto folks, myself included.
The report definitely suggests an altcoin season is showing signs of beginning, but it does hinge on specific things happening. We'd need to see Bitcoin stabilize, maybe grow a bit after the Fed news. And crucially, that Bitcoin Dominance Index, BTCD, needs to keep declining.
Right, the money flowing out of Bitcoin into alts.
Exactly. If those factors line up, yeah, we could see significant capital flowing into altcoins. And what's more interesting, the report actually highlights specific sectors that could really benefit. DeFi, RWA, real-world assets, and stablecoins. The insight there, I think, is that these sectors aren't just, riding Bitcoin's coattails. They're showing some fundamental strength because they have increasing utility.
Okay, so it's not just hype.
Potentially not. Like RWA bridging traditional finance with blockchain, that provides tangible value. It might make them more resilient if the market turns sour compared to purely speculative altcoins. The report even mentions Bitwise filing for an ETF in the stablecoin sector. That would be huge for that area, right? A big step towards legitimacy.
Yeah, absolutely.
But on the flip side, your meme coins, the highly speculative alts, they could face the biggest risks if the market reacts badly. Investors might just flee to safer assets, Bitcoin, established stablecoins during that uncertainty. It's that classic flight to quality thing.
The meme coin holder's eternal dilemma. So during turbulence, it's a flight to quality, meaning Bitcoin and stablecoins are kind of the digital equivalent of, I don't know, stuffing cash under the mattress, but maybe with less lint. Okay, beyond the immediate reaction, what are the bigger, longer-term trends? What's shaping the crypto world over the next few weeks, maybe months, according to this report?
Regulation is definitely a critical piece, and we're seeing some, while promising, but still complex developments there. In the U.S., you've got influential figures like Michael Saylor actively lobbying for a strategic Bitcoin reserve bill. The real insight there is how something like that could legitimize Bitcoin at a national level. Imagine it being seen as a recognized asset for state treasuries, maybe even part of national reserves. That fundamentally shifts how people perceive its risk.
Yeah, that would be a game changer.
Absolutely. And then there's the new SEC chairman, Paul Atkins. He seems more inclined to actually create a clear regulatory framework for digital assets rather than just trying to, shoehorn them into old securities laws. That's a big philosophical shift.
Acknowledging they're different beasts?
Exactly. Instead of forcing a square peg into a round hole. And the Genius Act for stablecoins, even though it hasn't passed yet, that's another important one to watch. It aims to bring clarity there. Even seeing international cooperation like talks between the UK and US on crypto regulation, that's a positive signal. It shows a global move towards a more structured approach.
That shift in regulatory thinking sounds potentially monumental. It could definitely bring a level of certainty the market's been craving for ages. And what about adoption by the big players? The kind of mainstream acceptance that really moves the needle beyond just enthusiasts.
Yeah, that trend is definitely growing, and it seems to be accelerating. The report notes that public companies, even some nations, are increasingly adding Bitcoin to their treasury reserves. And we're not just talking a few early adopters anymore. Over 75 public companies have apparently already done this.
75. Wow.
Right. And the crucial insight here isn't just that they're buying the dip. It's that this creates a stable, long-term source of buying demand for Bitcoin. That could fundamentally change how market cycles work. When institutions hold Bitcoin as a treasury asset, they're probably less likely to dump it during minor corrections. It could create a more stable floor, maybe dampen some of that extreme volatility we've seen historically. It really signals the asset is maturing,
Yeah.
Moving from pure speculation towards a legitimate store of value.
It almost sounds like a slow-motion supply shock in the making, right? As more long-term holders just lock it away. Stablecoins keep coming up, too. They seem crucial in almost every part of this discussion. What's their long-term trajectory looking like, especially with all this regulatory buzz?
Oh, their trajectory is incredibly significant. You could even argue revolutionary. The use of stablecoins is projected to just keep increasing, and not just for Huge financial deals between institutions, the report suggests they'll expand dramatically into everyday retail uses too.
Like paying for coffee.
Think about it. Using a stablecoin for your daily coffee, maybe your rent, sending money instantly and cheaply across borders. The development of properly regulated stablecoins could genuinely become the backbone for global money transfers. That suggests a really profound shift in how value moves around the world. It could seriously disrupt traditional remittance services, legacy banking systems, making global payments faster, cheaper, and way more accessible, especially for people who are currently unbanked.
That's a huge vision, truly redefining global finance. Okay, so for our listener who wants to stay informed, maybe even navigate these markets, what are the absolute crucial metrics to keep an eye on? Like what should be on their real-time market dashboard?
The report highlights three really essential indicators that give you a good pulse on the market. First, Bitcoin dominance, or BTCD. It's currently hovering around 56–57%. What's particularly telling, according to the report, is that this index is showing signs of breaking a downtrend. That's often seen as a strong signal for an upcoming altcoin season. So if BTCD keeps falling after the Fed news, it confirms that capital is flowing out of Bitcoin and into altcoins, spreading the wealth, so to speak.
Got it. BTCD, what's second?
Second, ETF flows. The spot Bitcoin ETF net inflows, still very strong, $230.6 million in the last 24 hours alone. This is just a critical indicator of institutional investor interest. Tracking these flows tells us if the big institutions are buying the dip during corrections or if they're taking profits when things get volatile. It's basically watching how the big money is moving. Often gives a clearer picture of long-term sentiment than just retail trading.
Okay, ETF flows. Makes sense. And the third?
And finally, the Fear and Greed Index. Right now, it's at 53, which is classified as neutral, slightly up from yesterday. This index basically measures the overall market mood, the sentiment. So a positive reaction to the Fed could quickly push it towards greed, indicating euphoria may be getting ahead of itself, while a drop towards fear could signal a potential buying opportunity for those looking to get in at lower prices. It's just a good pulse check for the market psychology. Helps you gauge if the crowd is maybe getting overexcited or if there's genuine worry. I have to confess, my own Fear and Greed Index tends to swing pretty wildly around these Fed meetings.
Huh. Good to know it's not just me then. Okay, the report also gives some perspectives on actually navigating these choppy waters. What are the likely scenarios and maybe some strategies for, an average market participant during this time?
Yeah, the most likely scenario, as we've kind of touched on, is strong volatility immediately after the Fed's decision. It's almost guaranteed. Now, if the Fed cuts rates by 25 basis points, like many expect, the market might see an initial sort of relief rally. Followed maybe by a period of consolidation, Bitcoin could retest $120,000, while altcoins start gathering some momentum. However, any hawkish signals from Chairman Powell say he expresses stronger than expected concerns about inflation or hints at future rate hikes that could quickly reverse the market, send prices downwards. It's this really delicate balance between market expectations and the actual reality of the Fed's statement. The key, I think, is to try and avoid getting swept up in those immediate knee-jerk reactions.
That's crucial advice, not getting swept away by the noise. So, what should our listener really keep in mind about risk, especially around such a pivotal event? What are some sort of prudent strategies the report suggests?
Right, and it's absolutely vital to stress this is not financial advice, but the report does offer some very sensible strategies for managing risk. First, prepare for volatility. It's coming. Periods around these big macro events often have low liquidity and high volatility. That means rapid price swings. So it might be wise to consider reducing leverage if you're trading, or maybe even just wait for the markets to find some stability before making big moves.
Patience can be key.
Absolutely. Second, diversification. It's always key, but especially now. Instead of putting all your eggs in one basket, distributing capital across different areas, maybe a mix of Bitcoin, Ethereum, some solid foundational altcoins, and even stablecoins that can help mitigate risk if one particular sector takes a big hit. Third, monitor those key support and resistance levels. For Bitcoin, keep an eye on that resistance around $116,000, $117,000, and know where the lower support zones are. How the price actually reacts at these levels gives you crucial clues about the next potential trend.
Okay.
And finally, just stay updated. The crypto market is so heavily influenced by these external factors, so continuously tracking the news on regulations, comments from Fed officials, it's paramount. Knowledge really is power in these situations, especially when the landscape shifts so quickly.
Incredibly insightful advice, thank you. As we start to wrap up this deep dive, What specific events should our listener maybe keep an eye on for tomorrow, September 18th? What's on the immediate horizon right after this potential Fed earthquake?
Yeah, the report points to a few key things to watch very closely tomorrow. First, the Asia and Europe market reaction. How do those markets react in their initial trading sessions after Powell speaks? That will reveal the first global take on the decision and really set the tone for the U.S. trading session later.
Okay, the global ripple effect first.
Exactly. Second, the Bitcoin ETF flow data release. The inflow-outflow numbers for today, September 17th, will be made public tomorrow. That number will directly reflect how institutional investors reacted to the Fed's decision in real time. It's a critical gauge of smart money sentiment.
Right, see if they bought the news or sold it.
Precisely. And third, keep an eye out for post-FOMC analysis from the big banks and analysts, JP Morgan, Goldman Sachs, folks like that. Their reports and commentary will definitely shape the market narrative over the next few days. They offer deeper dives into Powell's speech, and that influences medium-term expectations. These analysts often provide the lens through which a lot of traditional finance views these crypto events, so their interpretations carry weight.
Got it. Watch Asia-Europe, watch the ETF flows, and watch the big bank analysis. So we've navigated the immediate tremors, looked at the longer-term tectonic shifts, from the Fed's ripple effect, the rise of stablecoins, institutional adoption. It's just so clear the crypto market is at this constant crossroads, always evolving, always redefining itself.
And this really brings us to, I think, a quite profound observation. What we're witnessing here is more than just price charts wiggling up and down.
Yeah.
We're actually seeing the foundational elements of potentially a whole new financial infrastructure being laid down, one that's intrinsically linked, as we've discussed, to global monetary policy. And this raises a really important question for you, our listener, to think about. As these big macroeconomic forces and these evolving regulatory frameworks start to solidify, how will they ultimately redefine not just digital assets themselves, but the very nature of global finance and maybe even wealth distribution as we know it? It's definitely a question worth pondering.
That certainly is a deep thought to ponder as we head into whatever tomorrow's market brings. We really hope this deep dive has given you some clarity, armed you with the insights you need to understand this incredibly dynamic landscape. Until next time.